Here we go. Stocks by the numbers, welcome back. And I wanted to just run over a bunch of things that I was keeping an eye on all throughout the day. I was trying to update people in the Discord. Again, Discord free for you guys to join if you want to come in. Just request a fresh link in the comments and I will send you a fresh link to join the Discord community. Currently over 200 people in there right now. But a couple of things that I pointed out, and my apologies if you are following me on X, but you're not in the Discord because I actually completely forgot to post these trades on X, which might have gotten me a little bit more attention, but it's fine. But we can see here, one of the first things I was looking at was oil, and I was looking at this key level here of about 67.5. First of all, let's give your boy some credit here because it was like back here where I actually drew out this predicted path. You can see the green, and I said that I was predicting that oil was going to step its way down back to this key level of about 67.5 per barrel. And you can see now we actually spiked back up above that line, but we're sitting here at about $67 a barrel. But great call by yours truly. And then you can see the drop down here started with those trend lines from that top right there, December 13th, cutting across to those tops. And you can see that's actually right where it bounced. And then we had a big run up today. And then we kind of recorrected as, Powell started speaking. And you can see that we spiked up and got above that trend line, retested, and then ran about another 50-60 cents a barrel, and then we came right back down below it, tried to retest, rejected, and then dropped back down. So now, in my opinion, oil, you're in kind of a wait-and-see mode. Again, if you're looking to trade oil, USO is the ETF that tracks crude, and you can obviously buy calls or puts on that, but right now, again, it bounced off this key trend line and it came up and tested this key level. So now you have to see Monday if it wants to run back up and retest and potentially close maybe right around this fib level, 67.82, because that may reverse the momentum and cause it to actually run up and break out slightly of this downward channel that we've been in to retest the 20-day moving average. And then depending what Trump says or what's going on around the world, you may actually see it continue and break up to 73, 74 an ounce. A barrel. So that's definitely a key level to keep an eye on, in my opinion, around 67.5. If you're looking for a trade going into Monday, Tuesday, in my opinion, that's one to keep an eye on. I mentioned a lot of things though in the Discord. Again, it's harder to make videos as opposed to just mentioning it quickly in the Discord, but I always try to mention anything I see or update people on charts and whatnot. I was also looking at Verizon. Verizon's one that I like because it's a brand name, and usually when they really beat it up, it bounces back. And we know that telecoms are cyclical, and you can see that even coming back here, kind of towards the end of 2023. Look at the big sell-off that VZ was in. And granted, they were, potentially losing some subscribers, the cell phones and whatnot, because I know that's all they track really for these telecom stocks. But overall, even AT&T was selling off during this time. So telecoms were seeing a lot of weakness, a lot of money flowing out of them. And then you started to see just the opposite of that. And we ran up and then had a big rejection and dropped down here into this channel, broke support going into the new year. And then you can see kind of that flash crash out of the channel. Back here, you can see another path I laid out. I probably mentioned this in the Discord at the time, probably for, short-term VZ calls. And you can see the stock runs back up to 40 and change, comes back, retests that fib, and now it's just been on an absolute tear. So I just wanted to show you that. First of all, it's hitting new highs, 46.20 today. And again, this is a stock that when it was getting beaten up here, really the whole time down, even when it hit the low 40s and the mid to low 30s, I was saying, in my opinion, this is an overreaction. If I had some wealth, I would consider parking a big chunk of liquidity into something like VZ, because it's probably going to storm back to 40 plus, and you can make, 30-40% off your principal investment while collecting a dividend the whole time to hold it. Verizon, again, paying a dividend, currently yielding a little over 6%. With a 10 PE, but we do know that telecoms a lot of the times are kept at lower valuations than a lot of other stocks in other sectors. But I just wanted to draw out, again, this is going from the low October 6, 2023, coming up to that low right there, July 23rd, 24, and see how we broke down and then tried to retest that support, and then we broke and fell even further, and now you can see we're running and we're almost back at that level. So this is something that, in my opinion, you might want to keep an eye on. VZ, I always liked them. Again, options are pretty cheap. So even now, if it's going to run up to this trend line, let's just say about 47.15, and it happens on Monday, you know, probably like 47s or 47.50s, or probably maybe like 30 and change. So VZ options usually are very cheap, and if you can catch the sell-offs at the right time, or the rebounds at the right time, something like VZ, I mean, you know, I've personally in the past purchased calls and puts for like $7, $11 each, and then all of a sudden, you know, they're worth 38, 45, 62. So Verizon, believe it or not, can show you some really good returns, but obviously when it consolidates and has these flattening zones, that's what can, you know, destroy the position. But something like VZ, in my opinion, you're going to want to keep an eye on around that 47 and change level, because if it gets back above that trend line, you might see it just beeline straight up to about 50, kind of where it was before all of that took place. So something to keep in mind. DraftKings, I made a great call on DraftKings, not to brag too much, but yeah, let me zoom in a little bit. So see, going from these tops, March 27th, 2024, and you can see how I come down across kind of that next high, across that high, right? So these are my support levels. And you can see, if we zoom in here, you can see, look at that sell-off, and this right here, at about 1140 and change today, as we approach 37, and you can see this trend line is what, like 37.05. As we approach 37, that's when I said in the Discord, in my opinion, DraftKings calls. And you can see it hung out at the trend line. Markets continued to drop and sell off. So the stock, again, you're never going to time the absolute bottom. You're never going to sell at the absolute top. So the stock ended up breaking down for about, looks like about 15 minutes almost, breaking down below that key level, and then stormed back, retraced it, wedged, and then absolutely exploded. And you can see coming back to the daily resistance up until that point. You can see breaking up right through it, coming back, flash crashing, and then just up and up and out. And technically, even if we expand out to yesterday, you can see the top line on the daily is this line, and you can see that DraftKings came up right above it, retested, and then bounced off of it and just continued up and up. And DraftKings, first of all, it was a decent call because, of course, you know, my trend lines, my TA, it worked out, and I saw a key level and caught the bounce. I stepped in here and bought 37 calls expiring today, and then I sold them at like here somewhere, 39 and a quarter or whatever it was. So you know, it was like a 400% return or something like that, but risky, of course, right? Because it was expiring today. But you understand my point. This is why I like doing trend lines, and this is why, again, if you'd like, you can join the Discord, and when I see something, I try to say something. But Discord, I always said for quite some time, ever since the revenue really started chunking up, I said that, in my opinion, anytime you see DraftKings, yeah, it was like from this point, anytime you see DraftKings in the low 30s, it usually always runs back up, right? Comes back down here to about 35.5, 36, runs up to 45, comes back down here to high 35s, runs up to the top of the trend line, 43. Earnings came out. We saw the stock explode up to 53, hit new highs, and now we came back down. And you can see again, as it came down here, you have the bounce right back, right? So it wants to keep that bullish momentum, but remember, rates were up in the air. Technically, unemployment came in slightly above what they were expecting. They were looking for 4% unemployment, came out at 4.1%. So the first couple hours, the market started a nosedive, and then we just kind of had that V reversal. So the markets are volatile in its current state, and a lot of stocks could be a little bit more sensitive than you'd want them to be. But I still say something like DraftKings, the rate at which they're growing, increasing their footprint, and again, you can see that revenue growth over the years. This is why I said, you know, when looking at the numbers right now in this current environment, unless we really start chunking down, probably anytime you see DraftKings dip down, especially if you can buy some time on your options, calls are probably going to work out more times than not, in my opinion. Also wanted to look at SentinelOne. Did a video on this, I don't know when, but I'll back it up. So yeah, it was right here, I believe. I may have done an update, I don't remember. But I drew out this trend line here. I predicted, I drew these trend lines out blindly, if you recall. You can go back and look at that previous SentinelOne video. Again, that was back December 9th, I believe it was. The next day, it chunked right back down to that first predicted trend line I drew out. Look at how it bounces off of it about 4 or 5 times. Boom, big red drop down to where? The next, again, this was naked, blindly drawn trend line. And you can see how it's a key level that the stock stayed at and played with for 2 months, 2 months straight, right? Even came down here and almost bounced off of it again, had a little bit of a run up, and then we began to break. And I said, in my opinion, when I last made that video, I said, if you can get in like 21, 20, 19s, the high teens, in my opinion, that is more of a fair value for this company. And I would personally look to start to build a position, piece my way in, and accumulate shares at around the 20 sub 20 level. And you can see that right now the stock's 1984 on the close, down a couple of more cents after hours, and technically did dip to the low 19s recently, but you can see how it's fighting right at this trend line. So if it does happen to break down again, which I really don't think, but see, like here you can see is kind of like a key level, so maybe like 1792, high 17s, low 18s. So you could still potentially see about a 10% sell-off. But the good thing is we dropped off and sold off, got back to fair value in my opinion, all before these earnings are coming out. Now you can see earnings due out Wednesday after market close, right? So technically, in my opinion, this stock should be ready to now bounce, reclaim this trend line, and run up to the moving average, and potentially even back to this fib here of about 23, 23.12. You may see that 10, 12, 15% run now throughout next week going into earnings for SentinelOne, because in my opinion, the company was growing nicely. We crunched the numbers in the previous video, and I said, you know, I like it over here, but it was at 25, and I said, if I can get it for cheaper, you know, I would like it even more. And it's basically right at the price where I said, personally, in my opinion, I would begin to piece in and build a position. So I wanted to update you all on SentinelOne as well. I was consistently updating everyone in the Discord with the charts on that. Switch over to HIMS and HERS, and we can see, look, so this one trend line going from the low here of September 6, 24 up to that low on January 10th, 25, you can see we're trending downward. And we technically, this was our resistance trend line, right? Connecting our tops, going back to that breakout just about 3 weeks ago. And you can see we're dropping down, and we're technically staying below resistance. So we can come back down to this support level, and you can see over the next day or two, you can see the very low 31s looking like about 31.13, maybe about 31.5, maybe if it takes an extra day or two, and then it can bounce and probably meet up with the 20-day and try to reclaim this trend line as well back to 45. So keep an eye on HIMS, HIMS and HERS, and see if it wants to drop down a little bit more and sell off towards that trend line, the low 30s. And then in my opinion, that's when I would personally expect a bounce, because we've seen the business growing, right? And the numbers coming in healthy. So that's why if it broke out and went to uncharted waters like it did up here at almost 73, now you're pulling it back, right? The stock's technically 50% on sale from the highs, right? But if you can get low 30s, of course, even better. So something like HIMS, if you happen to miss it, this might be your time to maybe start piecing in here in the low 31s. Or of course, if you're a trader, you can step in, maybe buy like a couple of weeks or a couple of months of time if you can, and you can go further out of the money. You know, you can buy 40s, 45, 50s, and you can just try to catch that nice rebound and get that steady growth coming in. Also, Elf Beauty. There's another company that has been seeing some pretty healthy revenues coming in, and you can see last quarter they slightly missed on the EPS side, missing by a little less than 2 cents a share, but the revenue yet again came in well above expectations. The company is growing nicely. I do have to give them credit, and you can see a really nice rebound today, almost 10% coming back to close above $70 a share, about $355 million on estimates of 330 million. So they beat that mark by 7.5% just a handful of weeks ago. And basically, this company actually at this level and at this market cap isn't too overvalued, because I crunched the numbers before I jumped on real quick. And in my opinion, it's trading just slightly above 2 times my quote unquote fair value. So you could see another leg lower, but it might be short-lived and it might bounce right back. And one of these trend lines here, so this is going from, looks like the low back March 20 of 20, coming up to right there about the 3rd week of May 22. And cutting across, oh wait, actually, oh no, that's going from the low, that's going from the all-time low of February 28th, 2019. And cutting up, yeah, okay, so see how we had the big double candle drop and then we had the big candles back up? And you can see, look, that mid-range right there. Let me zoom in even further. That mid-range right there of this volatile up and down, you can see, look, that's right where that wick stopped. That wick stopped right there. That's almost exactly where the body of that candle is, right? So you can see almost at the body of that candle right there. So that seemed like a key level to me. And again, I may have drawn it out, you know, looking at a 5-year chart or looking at an all chart. So it might not be, you know, perfectly lined up. But again, the idea mostly is to just kind of try to give you a generalized idea of where you can potentially see a stock going, right? But you can see that we chunked back up and we came just below that trend line, right? We're technically not there. And we're technically just below the moving average. So now, in my opinion, we're at a key level, right? Because if it wants to open up now and get above the moving average, above the trend line, now it's going to potentially run up and maybe come right up to there and meet up with that next trend line, which you can see could be like 82 maybe, or like 81.5, right? So you can have a nice little run up there in the short term. Or you have to see now if it wants to reject off the 20-day moving average, reject off the trend line, and then it's going to potentially come back down here to that next key support level we just looked at of the low 54s, it looks like. So this one is volatile, as you can see. You know, technically markets rebounded, but if you look at the major indices, you know what, 0.5%, 0.75% up on the NASDAQ, and something like ELF rebounded almost 10% today, right? So this is a mover and a shaker, and the traders know that. So if you're going close to the money, it's probably going to be a little expensive. So that's why I'd say something like this, in my opinion, I'd wait for confirmation of the up or the down, and then maybe consider positioning myself there. And also another company that no one cares about, even though it's up almost 200% from when I looked at it first on the channel. You can see all the way back here, early 2023, at about $550 a share. Coca-Cola Consolidated Incorporated, symbol COKE, listed on the NASDAQ. This is the bottling facility of Coca-Cola. So that's why I always like this company, because they're not necessarily really connected to the business, so to speak, of KO. And I mean, obviously, you know, if there's less demand, there's going to be less bottling. But again, you have to remember, they're bottling and then they're shipping it out, and then it's up to Coca-Cola parent company to do the rest, right? And that's why I said I always like COKE, because it was steady, consistent, stable growth and steady, consistent, stable business. And of course, we spoke about in the past, they did a big share buyback. And now you can see also coming the end of May, in about, what's that, 7 weeks, 8 weeks, you can see the board has approved a 10-for-1 stock split. So if you happen to catch this, when I first made the video about it, again, you're up, whatever, 160% in change, plus your dividends. Now, any amount of shares you had here, you're about to have 10 times as many shares now, with the stock split coming up in less than 2 months. And this is why I look at certain stocks and I do it the way I do it. Like I always said, you know, let the traders post their huge random 0 date expiration gains, You know, let them tout and act like they're some financial gurus, because the problem is most people aren't consistent and most people aren't disciplined. So the people who are able to do that kind of week in, week out, or even month in, month out, you know, you have some really big banger months and then you have kind of a lull month and then boom, you're able to show, you know, a couple of hundred, couple of 1,000% returns in your account in some positions. If you're able to do that consistently, obviously more power to you. You know, I wish you the best of luck. I'm talking about the average person, even when they pay other people to be in their trading discords, they will get blessed with a move like that and then just start throwing money at all of these random stocks, buying these crazy YOLO calls and whatnot, or, you know, piling it all into some random OTC stock, just hoping for a squeeze or just something random. And it's unfortunate. And that's why I say, you know, you have to become knowledgeable. And I always preach that after all the years of heartache that I've been through, you're much better off, in my opinion, listening to, I don't want to say listening to my advice, but at least take it seriously, I should say. Because I'm showing you that steady, stable growth. And also it's happening over time, so you're eliminating that stress. You're able to sleep at night. You're not tossing and turning. What's the market doing? Pre-market, is my stock up? Is my stock down? Did that go through? You know, did they get upgraded today? I need the stock to move. The option expires tomorrow. So that's why, in my opinion, much, much easier to play the long game and just work harder, not smarter. Work smarter, not harder. My apologies. But, yeah, really good call here on Coca-Cola Consolidated, and I just wanted to update you, anyone who might have a small position in this, you're getting a 10-for-1 split coming up soon. And you can see this was approved just a couple of days ago. Board approves 10-for-1 stock split. So we really, again, you know, not to hurt my hand patting myself on the back, but we really have been rolling on all cylinders on this channel. And you know, I'm proving it day in, day out, month in, month out, year in, year out now. Again, we're approaching, I think, like the 3rd or 4th year anniversary, I don't even know, of my channel. And the success rate speaks for itself. But that's pretty much it. I wanted to show you guys a couple of those trades and charts that I was watching today. And Coke, of course, could have been in its own video, but apparently none of you really look for it, unfortunately, as you see. But yeah, I just figured I'd throw it in and mention it here in this video. But that's pretty much it. I'll end it there. So once again, Stocks by the Numbers, I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comment section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good weekend.